Hey, Joe, how you doing, baby?
Mate, I'm not too bad. I am not too bad.
Well,
how are you doing?
You've got the lurgies though, right? You're in with
do.
your illness.
I actually do have the lurgies. Thank God it's the weekend because, like, this is what the UK government's been saying. Like, if you've got a cold now, you should like self-quarantine for a week.
All right.
So, yeah, I think I don't know. I'll see how I go over the weekend.
Yeah,
like,
bro,
thank God
rest
it's the
up.
weekend.
Rest up.
Yeah.
All right, look, you're probably, mate, I'm
Yeah.
not surprised you're ill anyway, because this week has been madness, right? It's been absolutely crazy, my dudes. You know, I don't even know where to start. Let's just start off with the markets just absolutely panic selling the hell out of stocks. You know, you did a big video on it yesterday.
Crazy.
It's like, it's just never going to end. We just have these pullbacks and then it's just further bloodbath.
Yeah. Yeah. Literally. I mean, I don't know how many people saw the video I did yesterday, but the main thing for me, it's like there's a crisis of leadership going on because there's been no coordinated action to tackle this coronavirus. Public health, we're not public health experts, so I'm not going to talk about the measures to stop the spread of the virus. But in terms of like the fiscal and monetary response, it's just been really disjointed. Like, oh, this bank does one thing, this bank does another, this government does one thing, this government does another. It's like markets want to see everybody like come together.
It's so true, and I think,
and that's the only thing I think really can save sentiment at this point.
I agree with you, and I think just where everyone's doing it so sporadically, like it just seems like you know it's sparking further panic. Just you know the central banks are just going left, right, and centre. There's as you say, there's just no coordination there. You know, stocks have just been great opportunities. You know, we have these rallies, and these rallies just present opportunities to short the stocks even further. You know, to fresh lows. I was speaking to Crystal yesterday. I mean, we're down. If you compare it to 2008, 2009 crisis, we dropped then about 47% back then. Now we've dropped around 30%, bro. 30. Yeah. So it's getting on those levels. It's dangerous. It's dangerous.
It is. And I don't see any reason at the moment why, you know, we should be optimistic that we've hit the bottom.
No.
Because we have stabilised a little bit today, but
dude,
like
it's
you
still
said,
well within its infancy.
I know.
It's mad.
So
and then obviously,
it is mad.
Yeah, and then we had Trump the other day. We were watching it in the morning here, and he's just funny, man. You know, like it's a serious situation, and he's like, you know, the US are in its best efforts. So I know we're going to kill this coronavirus. You know, the Europe have failed to do that. You know how he's just having these jabs.
Yeah,
like
I know. And just that in itself, I think, made the market panic because, like, literally, this US president is just useless. Like, US presidents are supposed to lead the world, and he's just there, like, blaming China for coronavirus, blaming Europe for not acting fast enough. Like, how does that help?
I know. And then that's
useless. And then he did his travel ban, didn't he? Travel ban.
Yeah, and that sparked further sell-off, hit
really.
Stocks massively. Yeah, it's really, really worrying times, my dudes. Really worrying times.
Yeah, really worrying. And yeah, I mean, on top of that, I mean, this was on the list of things we were going to talk about, wasn't it? Oil prices.
Woo! Damn, dude.
Wow.
Sunday at the Open.
Yeah,
bro,
that was insane.
That gap was like from $40 something, $44 down to, I think we gapped down to like 28 or something like that.
Yeah.
Saudi Arabia just like, stuff you, Russia. Oh, excuse the language.
Yeah.
Stuff you, Russia. And literally just went in and have priced them out, right, with this aggressive move.
Yeah, exactly. Well, I mean, Russia are also up in production, but from what I've been reading this week, I think the general consensus is, like, you know, in the past, when you have cheaper oil prices, that's meant to be good for global growth because it's like cheap oil for everybody. Well, now, from what I've been reading all this week, the consensus is that oil prices at these levels is actually bad for global growth. So obviously we've got the virus, and now we've got oil prices that are actually too cheap, and it means that all these countries can't make money off of oil anymore. Exactly. So they're kind of stuffed.
It hurts companies as well, doesn't it?
Exactly. It hurts.
Yeah, get killed on it.
Yeah. And it's not just them, it's banks. A lot of the important banks, like in the US and Europe, have a lot of exposure to debt from these energy companies. So it like increases the risk of a financial crisis.
Exactly. And then if we look in the FX markets, right, Don't forget the correlation with CAD. And CAD has taken a serious beating this week. If you look at it, dollar CAD last night, we got just shy of 140. Huge weakness there being affected by CAD. And obviously, as a reminder for anyone that doesn't know, CAD makes a huge amount of their foreign. The biggest foreign revenue comes from crude oil sales. So it's hitting them hard. Wait, did Bank of Canada? Oh no, that was last week they took action.
Last week, yeah.
All right, let's move on to Bank of England.
Oh, Bank of England.
Talk to me.
Yeah. I mean, what we saw, what was it? It was Tuesday, wasn't it?
Yeah.
Yeah, Tuesday. What we saw on Tuesday was
Wait, Bank of England
become...
That was
Wednesday, sorry, my bad. Oh, it's just a blur, isn't it? All this madness going on. Yeah, but anyway, what we saw was the UK really became the first country to properly coordinate fiscal and monetary stimulus, because you had obviously the UK budget as well, which is big injection of cash, 30 billion into the economy. Good stuff, to be honest. That is good stuff for the UK economy.
But pound didn't move.
And then, yeah, pound didn't really move. It's a weird one. You're right. And obviously, Bank of England did their 50 basis point emergency cut as well, and those two were specifically coordinated together. But yeah, you're right. Like, pound didn't. It's still been selling off all week, to be honest.
Yeah, exactly. The thing is, exactly. I think, you know what? The markets are still pricing in more action from Bank of England, aren't they? But another 25 basis point cut. Is it next week, the rate decision? Or the week after? No, it's the end of the month. End of the month.
Yeah.
End of the month. But here's the interesting thing, right? We've got the replacement, Andrew Sentence, coming in, isn't it? Few days.
Yeah.
He's going to be replacing
Andrew Bailey.
Bailey, Andrew Bailey, not Sentence. He's coming in, and he's actually a little bit more. He's a little bit more hawkish than Carney. I was reading some of his comments in his last one. Well, I found this comment quite hawkish, just saying that the Bank of England doesn't have much more room to manoeuvre. I thought that was quite a hawkish thing to say.
It is. I mean, I agree because, the ECB, they hardly ever say that. And it's obvious they've got hardly any more room to manoeuvre. And the BOJ never say that either. So even just the acknowledgement, I kind of agree, does come across a little bit hawkish. I think they're going to have their hand forced, though. Like, they're going to have to cut again and do QE and stuff.
Definitely. So I think that's continued to weigh on the pound at the moment. Yeah, pound just coming under some pressure. What else have we had? ECB, let's get on to that. That was really interesting. Obviously, look, at the end of the day, Christine Lagarde didn't bow down to pressure, right? She didn't. Because at the end of the day, she knows they haven't got much room to do anything else. What more can they do? So on that front, I see that as Euro bullish. Yes, we spiked high initially, right? On the fact they didn't cut rates, we came under pressure. Yet they made some slight adjustments, nothing huge to their, for the funding for banks. But I still see euros bullish just because comparative to dollar. I was talking about this in a blog actually. If you look, remember there's a huge divergence between the ECB and everyone else. Now everyone's coming more on par with the ECB, and ECB can't really do much more. So surely the euro starts recovering a lot of ground against a lot of its peers.
I completely agree. And I think, because, we saw, it was a weird day in FX markets yesterday. It was a very, very strange day. Like, the dollar had a massive rally, and loads of people were saying, safe haven, it's a safe haven, which probably is partially true. But markets were weird, because as stocks were selling off, bonds were selling off, and so was gold.
Smash!
So basically, it was like everybody wanted cash, and what is the most liquid currency in the world? It's the dollar.
Exactly.
So it's almost like normal FX fundamentals that we talk about were kind of like thrown out of the window just temporarily. So, like, mate, I completely agree with you. These normal FX fundamentals are going to come back because they have to. And when they do, if the Fed goes super dovish, does a 100 basis point cut next week, QE, all this kind of stuff, combined with the fact that the EC... Yeah. Well, I don't know, but they could. You never know.
They could.
And then combine that with all the things you've just been saying about the ECB basically holding their ground, being a bit more hawkish. That, fundamentally speaking, should be like massively bullish for euro dollar.
Indeed.
So, mate, 100% agree.
It's going to be interesting.
100% agree.
Interesting.
Yeah.
And then we've got BOJ as well next week, right after the ECB on Thursday. So ECB Wednesday. Federal Reserve Wednesday, then BOJ on Thursday. What are you expecting there out of interest?
I mean, there's not really much they can do. Like they've pretty much indicated that they don't want to cut rates anymore. I mean, pretty much from what they've said so far is they're just going to up their repo operations they're doing, like the Fed's been doing, and also buying of Japanese stock ETFs. So they're going to try and boost financial markets basically with just more QE type things, really. Mm-hmm. So okay. I don't think, I think markets are kind of, I mean, you can't really expect much from the BOJ because they're maxed out.
You can't, yeah. So there might be a little bit of short-term weakness perhaps for yen, but then it'll just resume safe haven status pretty much, probably, right?
Agreed.
Yeah.
Agreed.
Yeah. Okay, what's next on the list? I mean, we pretty much spoke about FOMC there. This 1.5, they've introduced that 1.5 trillion of this cash injection, right?
Yeah. That was insane last night. I mean,
because obviously the dollar was massively rallying, then it spiked all the way back. Well, it retreated a bit, didn't it, on that?
Yeah. I mean, there was definitely some stresses in the money markets for dollar yesterday. Dollar, like short-term funding markets. Basically, the reason we've explained about repo operations and why they exist from the Fed, to when banks don't have enough access to dollars and then interest rates start spiking, the Fed can step in and actually give them that liquidity that they need. And that was happening big time yesterday, the biggest we've seen it in years. That was partly why dollar was rallying so hard. And then the Fed stepped in with massive liquidity operations, that 500 billion yesterday, 500 billion today.
That's insane.
And then they're going to be doing that. It's insane, isn't it? It's insane. And they're going to be doing it like every week now for pretty much the rest of the month.
They have no choice, man. This is serious times. Serious times, dude. I mean, I can only guess, things will just continue the same next week, right? Are we going to expect anything different in terms of tone? Probably not.
I don't think so. I think it's all going to be about coronavirus and the fiscal and monetary response. That is the story at the moment, I think.
Mm-hmm. Okay, well, we're blessed with another good week anyway next week, I'm sure, with those 2 rate decisions as well. And obviously this ongoing theme. We just got just go with this. Go with the flow and see how bad it gets.
Exactly.
Not sure what we can do. Yeah. All right, buddy. Well, look, good to speak to you again. I'm back in the office on Monday, baby. So hope you get better.
See you soon.
And I'll see you next week, bro.
Thank you.